Global deal values just crossed 1.1 trillion. I am telling you, Maya, Goldman is right. The 2026 M&A supercycle is entirely real.
You only buy the hype because you miss your banker bonuses. Read the footnote. Global tariff volatility could completely shatter this whole thesis.
Shatter. Nice glass pun, especially with Apollo dropping $3.7 billion on Nippon Sheet Glass today.
Unintentional, I swear. But between Apollo's massive Japanese buyout and Estee Lauder whispering with Puig, we need to look at the actual math. The rundown.
I'm looking at this new Goldman Sachs note, and they're basically screaming from the rooftops about 2026.
Ah, yes, the magical M&A supercycle.
They're citing monetary easing, an AI capital tidal wave, and a much friendlier regulatory setup.
Nate, come on. It's literally Goldman's job to manifest deal fees. Every year they predict a massive surge for the next year. Did you read the actual risk disclosures?
I read the executive summary like a normal person.
Well, I read the footnotes. They hedge that entire optimistic outlook with massive warnings about global trade tariffs and geopolitical shockwaves. They're basically saying deals will explode unless they completely fall apart.
Fair, but look at the tape. We just crossed 1.1 trillion in global deal value year to date. The surge is already happening.
In specific pockets, yes. Healthcare is doing the heavy lifting. Gilead is reportedly days away from dropping $2 billion on Ouro Medicines.
Autoimmune T-cell therapies, that's a massive check for a clinical pipeline.
They have to pay up. And it's not just biotech. Olympus Partners is selling the retina division of EyeSouth to Cencora for $1.1 billion.
Just the retina business. Private equity slicing up human anatomy for multiple arbitrage.
I love a clean carve-out.
You know what I love? Hostile maritime drama.
I can hear you smiling.
Genco Shipping just officially rejected a revised takeover bid from rival Diana Shipping. The target board basically told them to walk the plank.
Are we expecting a hostile third bid?
I'm watching it closely, though. If you want real naval action, Arlington Capital Partners just bought Eptec Defence.
The Australian naval preservation guys.
Preservation Services, which is prime banker speak for painting boats.
It's advanced anti-corrosion engineering for military vessels, Nate. That means deeply sticky government contracts.
Sure, but the real gossip is in the consumer aisle. Estee Lauder is talking with Puig about a combination, and Unilever is supposedly offloading its entire food business to McCormick.
Wait, really? Unilever is selling to the Spice Guys?
Imagine the synergy. Hellmann's mayonnaise, but heavily seasoned with Old Bay.
That sounds like a terrible idea.
It sounds like a high-margin brand extension.
I need to see the term sheet on that mayonnaise before I believe it. But speaking of massive cross-border bets, we need to talk about what just happened in Tokyo.
Apollo Global Management just dropped $3.7 billion on Nippon Sheet Glass.
Their biggest Japanese private equity deal ever.
The automotive and renewable energy angles here are fascinating. The big one, $1.1 trillion. We're not even out of Q1, and global M&A volume is already blowing past $1 trillion.
It's wild, and Goldman is out here saying 2026 is going to be the real tidal wave. They're citing monetary easing, AI capital investment, and a friendlier regulatory environment.
Which is just banker speak for the deal toys coming back to the bullpen. Though Goldman did hedge a bit with the usual global trade tariff and geopolitical anxiety warnings.
Always read the risk factors, Nate. But the deal that actually pushed us over that $1 trillion line this week is the one I can't stop looking at. Apollo taking Nippon Sheet Glass private, $3.7 billion.
The biggest private equity venture they've ever done in Japan. I love this deal. It's a classic, beautiful macro play.
You love a glass manufacturer?
I love the setup. You have a weak yen, corporate governance reforms in Japan making boards actually listen to buyout offers, and a target sitting right at the intersection of automotive and renewable energy.
See, that's exactly where you lose me.
How do you hate automotive and renewables?
I don't hate them. I hate the narrative dressing. The press release is screaming about solar panels and green tech. But look at the actual revenue split. It's still overwhelmingly just putting windshields in cars and windows in office buildings.
Windshields are a very sticky business.
Sure, but glass is incredibly capex heavy. The margins are notoriously thin. Apollo is a credit monster. They like steady, predictable cash flow, not feeding capital into a furnace. Literally.
Oh, come on. That's exactly why Apollo is the perfect buyer. They strip out the inefficiencies. Nippon Sheet Glass has been bloated for a decade. Apollo comes in, restructures the debt, spins off the low-margin architectural glass, and rides the solar panel boom.
That's a very neat pitch deck version of reality. Restructuring an old-school Japanese industrial giant isn't like flipping a software company. The labor dynamics alone are a minefield. You can't just walk into Tokyo and start firing middle managers.
Okay, fair. The cultural friction is real. But Apollo is paying $3.7 billion. They aren't doing that just to learn how to make a nice skylight.
Did you see the financing structure, though? Because that's the part that actually impressed me.
Tell me. Voices? So Goldman Sachs just put out a note saying we are looking at a massive surge in M&A, massive. But here is the kicker. They are calling it for 2026.
2026? Nate, we are already sitting at $1.1 trillion in deal value year to date. Are the Goldman analysts just ignoring right now?
They are looking at the macro timeline. They cite the holy trinity for deal making: monetary easing, AI capital investment maturing, and what they call a more balanced U.S. regulatory environment.
A balanced regulatory environment. That is pure banker speak for hoping the FTC stops blocking everything that breathes.
Hey, I resemble that remark. But you have to admit the AI capital cycle is real. Companies are going to need massive scale just to afford the compute.
Sure, but read the actual note. Page 4, buried in the risk factors, they hedge the entire optimistic outlook by warning about geopolitical tensions and global trade tariff volatility. It is the classic analyst move. Predict a boom, but blame tariffs if it busts.
You always go straight to the risk factors.
Someone has to, especially when you have companies like Diana Shipping getting their revised takeover offer formally rejected by Genco. The seas are literally and figuratively choppy right now. Tariffs actually matter to these targets.
Okay, point taken on the shipping drama. I am keeping an eye on whether Diana comes back with a hostile third bid, by the way. But you cannot deny the big money is already moving despite the macro risks. Look at the cross-border stuff.
Which proves my point. The boom is happening right now, not in 2026.
Fair enough. Which brings us to the $3.7 billion piece of glass in the room.
Oh, the Apollo deal. We really need to talk about what they are doing in Japan. Spill the tea.
I'm telling you, shipping drama is the absolute best drama. Genco just officially stiff-armed Diana Shipping again.
A revised offer too. They didn't even pretend to think about it. You have to wonder what Diana's next move is.
Oh, they go hostile? I smell a hostile third bid coming by tomorrow morning. It is literal maritime warfare at this point. Just guys in Midtown fleece vests trying to steal each other's boats.
Fleece vests and aggressive Excel models. But while you are obsessed with the high seas, I am staring at the cosmetics aisle. Estee Lauder actually confirmed they are in talks with Puig.
Such a good fit. Puig has that unbelievable niche fragrance portfolio. Estee needs the juice. It is a perfect narrative.
Good fit? Nate, come on. It reeks of desperation. Estee's stock has been absolutely hammered lately. They are just trying to buy growth because their legacy brands are stalling out in China.
You always hate the defensive plays. Sometimes you just have to buy the cool kid to sit at their table.
I do not hate defensive plays. I hate expensive defensive plays. Show me the actual synergies in the footnotes that justify the premium Puig is going to demand.
Fair. Speaking of strange combinations, Unilever is reportedly trying to dump its entire food business onto McCormick.
See, now that is a spin-off I actually like. Unilever has been trying to figure out what it wants to be when it grows up for half a decade, handing over the mayo and bouillon cubes to the Spice Guys. It is clean.
It really is. It clears the deck entirely, which is exactly what Goldman Sachs is telling clients to do right now. Did you see their new note?
I did. They are projecting a massive M&A surge by 2026, mostly driven by monetary easing and a ridiculous amount of AI capital investment.
Unless global trade tariffs ruin the party. But you do not even have to wait until 2026 to see the momentum. Wait until we unpack the trillion-dollar boom happening right now. Tomorrow's radar. So looking at tomorrow, Goldman is practically screaming from the rooftops about a massive M&A surge next year. They're citing monetary easing and AI.
I read that note. They completely buried the tariff risk on page 4. Classic sell-side optimism.
Oh, come on. $1 trillion year to date isn't just optimism. Look at Gilead. They're supposedly finalizing that $2 billion buyout of Ouro Medicines tomorrow.
That one I actually buy. T-cell therapies are the new gold rush. But what I'm really watching tomorrow is the high seas drama. Genco just rejected Diana Shipping's revised offer.
A shipping proxy fight, my favorite kind of petty. You think Diana comes back with a hostile third bid?
Absolutely. They want those dry bulk carriers badly.
Spoken like a true spreadsheet junkie. I'm mostly just here for the Estee Lauder and Poog merger gossip.
You really do just love the drama. Speaking of corporate theatre, we need to talk about Unilever trying to dump its food business on McCormick next.